Dude, if your primary source of investing research is YouTube, you're doing it wrong. What's up, family? Welcome back to the channel. This is Trey getting in touch with you from Japan. I've seen a few videos in the last few days by other investing YouTubers who are kind of like, guys, you need to stop using YouTube as your main source of research for stock investing. And just the whole idea of stock-focused or investing-focused YouTube channels as well. And I agree with them. One of the really tricky things as a small YouTube channel is that the algorithm, which is basically all of the thinking and all of the planning going on behind the scenes in YouTube's system, basically at some point or another, if you want to grow, you're going to have to please the algorithm. And for small investing channels like mine, you're going to have to change the way you present things. You're also going to have to throw out certain types of investment strategy. And I'll explain what I mean by that. Like, when I started this channel, it was kind of like investing, small business, mindset, stuff like that. And I would do videos, I'd do investing in Microsoft, investing in Target, investing in Zoom and Dropbox and all these companies, and those would do well. And then I would do a video about why sleep is important, or how to learn how to develop your skills as a communicator or something like that. And my scores in YouTube would just plummet. Nobody was clicking on it, which, granted, my thumbnails and titles probably sucked. I don't know if they deserved to be clicked on because that was a long time ago. But the people who were into my channel, who were interested in learning about stocks and investing, were kind of like, I don't care about sleep, or I don't care about a small business stuff or whatever. So they just wouldn't click on it. And then YouTube would say, wow, Trey's fans didn't like this video or thumbnail or topic, so it's not worthy of distribution to the greater YouTube audience. And so the algorithm just kind of cuts it off there. And so what ends up happening is I put out a Dropbox video, and all of a sudden my views are like super moon sky high, crazy stuff. And I'm like, wow, as a small time YouTuber, this really encourages me to just do Dropbox all the time. And since then, I've done a lot of Dropbox. I invest in Dropbox and I like it, and I understand it as an investment. I'm frequently having to remind a lot of you guys that I'm not your advisor, and actually you shouldn't just be chasing I want 10% return on my money today type things, because that will often end up, once things go the wrong way, which they probably will sometime soon, you're gonna get jacked, and you might, if you're using leverage, you might even be done for years after that, And so hedging risk while investing smartly. And so what ends up happening is I'll put out a Dropbox video and it's really good job, everybody loves it, 1,000 thumbs up, super awesome. That makes me want to do only Dropbox, or that makes me want to start doing more videos that are hey guys, 500% returns today, now, oh my gosh. And I get clicks for that. And it's promoting this unhealthy cycle that's not actually gonna help you grow as an investor. It's not gonna help you grow as a business person or as a leader, to help you figure out how to grow your skills into something that's more than just yeah, I make money on Robinhood and my life sucks and my job sucks and everything sucks, but look, I made 20% today on Robinhood, I'm awesome, kind of thing. Relationships and communication and hobbies and helping in your community, all these things are way more important than just dude, I made 10% on Robinhood today. Understandably, this year in the market, there are a lot of people who kind of need supplemental income and therefore have turned to the stock market, which is understandable. But all that to say, I want you guys to be really wary of the fact that things won't always be this easy. Since the downturn in March, it's just up. And there are a lot of stocks even now, speaking of Dropbox, it was up 5% yesterday. That's more than a lot of people's investments grow in an entire year in the world. Here in Japan, you invest in CDs or in a savings account and you get 0.00125% or something like that. So making a 5% return in one day is bonkers for a lot of people in the world. And I don't want to discount that, and there's value in that, obviously, and that's what we're looking for as investors. But when YouTube has become your main source of research, looking at all these different YouTubers who are telling you what you want to hear, and so it's really easy to be oh, as long as I just follow what these famous guys are saying on YouTube, I'm gonna make money and it's obvious. Why would I waste my time learning about what revenues are and expenditures are and how companies and corporations work and all these different things. If it's just like, oh, obviously I just follow these guys and I'll be set. You're going to stop improving. You're going to stop growing as a human, as a business person, and as a proper investor anyways. And like I said, the market isn't just going to keep going this way. And a lot of these YouTubers, I think it was Warren Buffett that said, you find out who's naked when the tide goes out. You know, and there are a lot of people who are on the internet right now, look at Wall Street Bets or different places on Reddit or things like that. It's really easy to look like a baller in this market right now. It's really easy to be like, yeah, you know, I'm up like 300% this year. And that's not that insane, actually. But when crap hits the fan even harder, especially when you're using leverage and things turn really weird. Like right now, it's kind of like, oh, we got a new president, vaccines on the way. We don't really know if the vaccine's super trustworthy, but we hope it is. And all these other like positive news bits, you know, Biden really likes clean energy. All these different little things that are coming up on the horizon make it easy to be like super optimistic about the future. But there's bound to be something that happens that upsets the stock market or that causes some downturn, whether it's in 1 month or 10 years, it's going to happen at some point. And so all that to say, I want you guys to be really careful about who you're getting your advice from and how active of a role is your own mind playing in your decisions. Are you putting all of your decision making onto some famous guy and just saying, oh, this guy's buying it, so I should buy it? Awesome. Because that guy might not always be around for us, you know? And also, he's probably wrong in many different cases as well, too. And so I'm encouraging you guys in this really like rough, roundabout, off-the-cuff type way to take a look at the fundamentals, stop and take a step back and say, okay, I need to learn how to evaluate a company. I need to learn how to invest slowly over time. I shouldn't always be expecting 50% gains in a year. I shouldn't always be expecting the stock market to trend up and up and up for like many, many months in a row aggressively like it is right now. What's going to happen when it goes the other way and it drops like in March, like it drops the fastest huge drop ever in the history of humankind? Like if that happened tomorrow, would you be okay? Are you going to be super jacked? Will you be able to pay your mortgage, your loans and things like that? And all of these things are things you just learn through experience. And I've been in situations where I couldn't pay my bills before. And I've been in situations where it's like, dude, I'm so sure about this. I'm so sure that I'm okay leveraging it. And then it goes the wrong way. And you're just like, whoa, I just lost like many, many months of income in like minutes. That sucks. And I wish I didn't do that. You know, those times are going to come at some point, you know? And so just be aware of that. Just think about that, you know? And again, when you're looking at these different kinds of investors, investing channels on YouTube, remember that the algorithm kind of controls how they present information to you. When I put out videos on smaller companies or even super big companies that aren't super big and sexy, like Microsoft or Apple or these kinds of companies, like not a lot of people click on it because they know they're not going to get like 100% gains in 2 days. Whereas if I put out a video on the tattooed chef or something like that, which I'll probably be doing in the coming weeks because I've been making a killing on it, I know there's going to be a lot of traction on it just because it's the hot stock right now. But we need to learn how to take a step back and say, the hot stock right now isn't investing. That's gambling in some cases, and that's day trading in some cases. But investing as a business owner and saying, I'm going to buy this small percentage of this company because I believe and I want to help grow and change this company is investing. And so it's important for you to figure out which are you. And if you want to be a gambler, I'm not like judging you. I'm just saying you need to be careful because it's not always going to be this easy. But if you want to be an investor and an owner, and you want to set yourself up for big long-term stability, steady gains over the years, that's a whole other way of thinking. And you're not going to be able to get all of those foundational, fundamental skills just from YouTube. So looking forward to hearing what you guys think about that. Thank you guys so much for listening all the way to the end. I really want to wish you guys great holiday time and New Year's time as well. Thank you so much for your support over this year as we've been growing this channel. I love you guys, and I look forward to talking to you soon. Have a great one.